Hello everyone and welcome to another exciting episode on the Glitter Finance YouTube channel. We welcome you all to this series where we bring projects on and find out about the exciting involvements they are bringing into the crypto space. If you are new here, make sure to check out the innovations that Glitter Finance is working on by going to our socials linked below. You really don't want to miss out on those. But in this video, we are shining the spotlight on a very special project, AlgoGard. I'd like to welcome the founder and CEO behind Guard, a revolutionary DeFi platform that's moving things forward in the AlgoGard ecosystem. I think you guys really want to stick around for this video, find out what the protocol is about, and I don't think you're going to regret it. So their socials will be linked in the description below, and without further ado, let's get started. So hello Riley, could you tell us a little bit about yourself and about the AlgoGard ecosystem and your involvement in the ecosystem protocol?
Yeah, well, hey everyone. It's good to meet you all, and it's good to be here. We're really excited to be working with Glitter and to get more into my background, right? I've been in crypto a while, and I've been around AlgoGard for a really long time. We got involved about 2 years ago when governance and AlgoGard governance became kind of a big discussion, but that was before the first governance period even happened. And we've stuck around up to this point, building different products that make governance better, that make AlgoGard better, and that have helped build a really great community.
Okay, great. So can you tell me a little bit about kind of the core team, how long you guys have been running Guard protocol for, how many people are in the team, and really any other additional information you'd like to share?
Yeah, so we have a great team with kind of a diverse background. We have some folks who come from the early Ethereum days when there was still debate about which smart contract programming language would be the one that led the way. One of them was a core developer of the Viper language. And we've got folks on the operations side that are, serial entrepreneurs, crypto and non-crypto. And then on the legal side of things, we have some folks that have been in crypto over a decade. So we've got a really great team that has been in crypto a while and knows what they're doing.
Nice. Yeah, that's absolutely crucial when running really any project, is that you need that team. That's the foundation of the project, and yeah, it's what's going to be kind of holding it and then taking it as far as possible. So it's great to find out that you do have a great team. I did take a look at the website and did see some of the team members, and yeah, I'm pretty impressed, and I can feel pretty trustworthy in the AlgoGard protocol. So let's now take a look at what you guys are actually offering, what exactly you guys are kind of contributing to the AlgoGard ecosystem. So I'd really like to just give the mic over to you, and you can start by talking about what you guys are offering and really all the different products that you guys may have.
Yeah, I think something that's really unique about AlgoGard is a lot of protocols are doing more than one thing, right? And I think there could be some benefits to that and also some drawbacks. We have made governance and improving governance and decentralization of AlgoGard kind of our North Star, right? That's what's been guiding us since we've joined AlgoGard. And so what that initially has looked like is a liquid governance solution, a CDP solution, and a stablecoin, right? And from there, we figured, okay, great, we can lend people our stablecoin, which allows them to go out into the ecosystem, potentially gain leverage, potentially pay for things, potentially buy more algos, whatever they want to do with that, right? While keeping that principal core exposure to algo, right? They don't need to sell their algos, which could be maybe a taxable event. Maybe that could be just a losing time. Again, if you want to buy something, but you think algo is going to go up a lot more, then obviously you don't want to sell your algos, right? There's a lot of reasons why leveraging that would be important to somebody. But what's cool about the liquid governance feature is that if you're earning interest on your algos, then the rewards you're getting through governance could actually offset any borrowing costs. So you're kind of getting this potentially free leverage, which is pretty cool. From there, we've really leaned into, I would say, like the core ethos of crypto, which is self-custody, censorship resistance, and really trying to empower our users, right? So one of the new features that we've implemented recently is now folks can participate in consensus with the CDPs that they have on our protocol, right? And so right now what that looks like is that if you already have your own node running, you can bring your algos from any of your CDPs online into your own node, which is really exciting and kind of innovative for Algorand. And in the future, we're going to be scaling up to the point where we're deploying nodes for our users, right? And so if they, they don't necessarily have the technical experience or the ability to do that themselves, they will still be able to do that through our platform. And what makes us unique, right, is with a lot of other liquid staking protocols in Algorand, there's no way you can actually get your algos back, which is frustrating, right? The only way you can get them back is if you trade your token for algos within a decentralized exchange, unless it's during one of the minting and burning periods, which only happens 4 times a year. And so if you want to get your algos back, you need your algos. It's actually can be quite costly, right? If you have to trade in a DEX where there might be some slippage or there might be trading fees. So I don't know. There's a lot of cool advantages to using Guard, and I think what really sets us apart is just our commitment to not only decentralizing our own protocol, but also decentralizing Algorand.
Great. So it does sound like you do have some innovations in the works, and some of these products are actually released right now. So if, let's say, I were wanting to, if I were interested in actually participating in this, wanting to use the Guard protocol, how exactly can I do that? How can you walk like a first-time user through how to actually contribute and start earning and start benefiting off of what Guard is offering?
Yeah, I think it's a great question, and kind of can segue into the Glitter partnership as well, right? But for the average user, right, you'll want to get Guard and use that Guard either to get more algos or get yield for helping support the protocol, right? And so if it's during governance period, you can bring your algos over. You can lock them in a CDP, which is a smart contract account that the user will control, and they can then borrow Guard against that amount of algos they've contributed, right? And something that's cool is we are adding different forms of collateral, right? Like we are also compatible with another form of wrapped algo that's live in Algorand. I guess it's the only wrapped algo, right? But there's it's one of the other liquid staking solutions, I should have said. So we're compatible with them. We're considering adding other forms of collateral as well, as long as they have that mission to become decentralized and not really censorable, right? We don't want that as part of any of the collaterals in our protocol. But again, so bring your algos in, create a CDP, borrow Guard against that CDP, and then once you have the Guard, you can either swap it for more algos and gain some leverage, or you can actually take that Guard and stake it natively on the platform to get protocol revenues, right? And so that's kind of a good segue into staking, right? Because that's kind of where the beginning of our partnership with Glitter is, and it's also kind of another one of our products that is newer, but adds value, and it's a great way that we're hoping to continue growing the Algorand community, which will contribute to the decentralization of Algorand.
Okay, nice. So I like how you actually did mention that, so that the Glitter staking as well. So if you'd like, can you actually share how that's going to work for users that are wanting to earn through that avenue as well?
Yeah, so it's definitely important to talk about staking, right? We when we first launched over a year ago, or about a year ago now, staking wasn't part of our roadmap, but we realized that it was definitely an important feature to bring to kind of help kickstart the adoption of Guard, right? And so initially, we when we launched staking, it was to pay out protocol revenues to folks that were holding Guard to kind of like have a savings rate, right? So they could save their Guard, earn more Guard, and what's important to highlight about that, right, is all the Guard that is in existence, right? It's over collateralized, and when they earn Guard, right, that's revenue, right? When people borrow Guard, the amount of Guard that they've borrowed goes up over time from the system interest rate and all of that, right? So it's important to note that we built this staking contract, one of the staking contracts, right, to add value to Guard, but once folks were using our staking contracts, right, we got nothing but positive feedback because our staking contracts, they automatically compound. So folks don't need to claim, and they don't need to come back every day, claim, restake, all of that. That's something that a lot of folks don't like to do. And it auto compounds every block, right? So you really get the best compounding possible, right? It couldn't be any better, right? The AlgoGard blocks are less than every 4 seconds. Right now, they're going to continuously get faster, and so folks are really able to get the most out of their staking rewards, right? But we were getting such good feedback that not only were folks saying like, we love these contracts, we love staking our Guard, but they also asked us to start adding in other assets from other protocols, right? And that's where Glitter came in, right? You all are our first staking partnership outside of our own tokens, and what's great about the partnership, right, is depending on how things go and how the community embraces the partnership, it leads into other potential ways for our protocols to partner, like potentially using XSOL or other wrapped assets as collateral to mint Guard.
Yeah, great. That all sounds really great, and I love the compounding staking. That's something I'm a huge fan of. I also don't like to just have to always go in, reclaim, put it back in. That to me, I've had some bad experiences with that, and then having to use like a third party to do that compounding. I've also had bad experiences with, lost some of my assets. So I really love the way that Guard is doing their staking. I think that's really, everyone should check it out. It's just earning rewards in a very easy way. So I do see that you have an algorithmic stablecoin, which given the past kind of crypto experience and the whole thing about the Terra Luna algorithm stablecoin, kind of I don't even know how to word it, but the whole issue that happened there. How can you kind of make people feel safe about this algorithmic stablecoin?
Yeah, so I think it's good to define what that means, right? So algorithmic stablecoin just means that you've got a stablecoin that keeps a peg based off of a set of rules, right? And so our specific coin, which is Guard, the rules it uses are that it needs to always be over collateralized, right? And where a lot of protocols run into trouble is if they use low liquidity assets as collateral, if they use assets that they issue themselves, right? Like let's say with Terra Luna, right, they used assets they issued themselves, which is dangerous. There's lots of red flags. I could talk about this for a long time, but again, the caveats in these protocols that have had massive issues are mainly that they either use low liquidity assets or they use assets that they issue themselves that don't have intrinsic value, right? Where we're different is the assets we use as collateral have this intrinsic value, right? Like we're using algo and then a wrapped algo that is, backed up one-to-one by algos. So it's important to note that algo has this intrinsic value, which is that it supports this whole AlgoGard network. It's also highly liquid, right? We don't have some sort of a situation where we say we have X dollars in collateral, but really, it's made up. It's not the case at all, right? We have a highly liquid, intrinsically valuable asset as collateral that backs up Guard, right? And where that's been very evident is when folks get liquidated, right? We've already weathered the Terra Luna collapse, right? The FTX collapse and other drawdowns in the last year. It's been a tough first year of operating. I'm not going to lie, right? There's been lots of FUD. There's been lots of there's been lots of things happening in crypto that have been really, really eye-opening, I would say. But what's been really cool during that whole time is we've never lost our over-collateralization, right? We've always been super over-collateralized. We've always had, like right now, let me just pull up our site. I can tell you right now, the Guard over-collateralization is almost 600%, 599.48%, right? So again, we're incredibly over collateralized, and that's kind of the most important part about any type of stable coin that's not backed one-to-one with whatever fiat you're trying, or whatever thing you're trying to peg to, right? Like you could think of any wrapped product potentially as a stable coin if the goal was to be stable against that other asset, right? But when we're talking about, you know, fiat stable coins, right, it's really important to be over collateralized with those valuable assets. And, you know, so we're an over collateralized protocol. We always have been, and you know, we use models that are battle tested, right? So it's important to highlight that you know, we're not just you know, saying we're over collateralized or saying there's some sort of a you know, it's, you know, I would say the track record's what's important to look at. And, you know, so far, every time there's been a drawdown, we've remained over collateralized, and I think that's what's important.
Great. Yeah, I think that's it is important to address that, and you've actually explained it really well. So thank you very much for actually talking about that. And if anyone ever mentions something like that, I'll refer them back to this to this video if they talk about the algorithmic token, as I think that was a great explanation. So what can you tell me about the Guard incentive program? I did take a look at that on the website. Can you just give us like a quick brief overview of what that is and how users can actually benefit from that?
Yeah, I think the Guardian incentive program is another thing that comes really from that ethos of wanting to empower folks who are getting involved and adding value to a protocol, right? To give them value for adding value, right? And so we created this token called the Guardian token, which is a loyalty token, basically, right? So folks who are doing actions that support the protocol get the Guardian token, and then they can stake it. They can do other things with the token to earn more of it, which folks have really loved doing. But it's important that this is just a voucher token, and it's designed to reward actions that support the protocol, right? So again, bringing more people into the protocol adds value, deploying liquidity adds value, being a user of the platform adds value, right? And again, what's going to happen in the future is that this token, the Guardian token, will be redeemable for our DAO token, right? And what's important about this token, why we launched it, was because even from our V1, we're actually on our V2 already, we had into the back end a DAO, like fully operational. And what that means is things like our interest rate and different features of our protocol could be changed with on-chain voting. And while that's a really important feature to have for the future, it's something that right now, if we were having votes, things might get changed that shouldn't be changed, or things could happen that might not be in the best interest of the protocol, right? And so as more people get you know, brought in, and more people start kind of you know, buying into what the protocol is and understanding, and when I say buying in, I mean like emotionally, right? Like they're learning, they're embracing it, right? When more folks kind of get involved, it adds value to the protocol, and as more people learn about kind of what we value as the founders and the direction we want the protocol to go in, we release more of these tokens. The ownership becomes more distributed, and more people kind of appreciate the direction of where the protocol needs to go. And it's like one of those things where at the beginning, the founding team's going to have the protocol's best interest in mind. They're going to be the ones who know best, right? But in the future, once our DAO is live and once these votes are happening, any control that we have over the protocol could be totally removed and voted away. And you know, I think that's the right way that things should be done, right? You know, it's right now, I think we know best, but again, in a year, 2, 3, it could be very well that another group or another individual has a better vision and you know, understands what needs to be done and can execute that a lot better, right? And so the DAO tokens are good because they not only control interest rates and things like that that are key to the protocol, but they also control a managing account, and this managing account basically will be the one who controls the web app. They get a small portion of the protocol revenues in perpetuity, right? Whoever is that managing account. So they'll be funded to run the web app, promoting the protocol and taking care of it, you know, even if we weren't there for the long term. And so it's a really important feature that we've built in already, and will help us decentralize quickly when the time comes.
So what kind of things can actually be voted on the DAO? Can you give us a few examples of what you guys are planning to do? I think that this whole system is actually very interesting.
Yeah, so one of the core pieces of our protocol, right, is the amount of interest folks are charged to borrow guard, right? And so that's kind of the biggest thing that folks can vote on within the protocol. It's changing that interest rate. They can also change what portion of protocol revenues actually get distributed to folks who are staking guard. There's also a portion of revenues that get dumped into a bucket of funds that essentially are the protocol treasury that the DAO will also control, and then they can vote on whoever this managing account is, right? Who is going to be the one who receives again that can be voted on, but they can receive a portion of protocol revenues. And what the managing account's meant to do is to again like lead the protocol forward, manage the web app, right? The web app is not blockchain, right? That's how people who are not technical can interact with the product, right? Because the blockchain's everywhere. The web app's just something that makes it easier for everyone to use. So whoever can get, essentially compensated for leading that development of the web app and keeping accessibility there for as many folks as possible. So there's lots of things that the DAO can vote on, and it's important that that's the case, because again, in the future, and the last thing that's important to note is what assets can be used as collateral to back up guard. That's another thing that they can vote on. But again, it's important that eventually the community will be the ones trusted to protect the protocol, to determine what these rates should be, who should be rewarded for doing what, and then what assets might also be important to add as collateral for guard, so that more guard can get into the ecosystem.
Great. So there's going to be like a wide variety of different different things that the investors can actually vote on. That I think I really like. I really support that. They're gonna have a say in the protocol. So
yeah, I mean the important part to note, right, is that folks aren't buying this token, right? They get the token for actually just adding value, right? So they get the token just by using the protocol and adding value to the protocol, right? They're not buying or selling it.
Yeah, so they don't have to necessarily be an investor. They could just they'll still be able to contribute. That's very interesting. I think that's a concept that more projects should maybe try to learn from and try to adopt. That's a very interesting concept. So speaking on that treasury that you touched a little bit on, the treasury and the fees, what can you tell us about that?
Right. So the majority of the fees right now, literally 80%, are getting paid out to folks who stake their guard. And what's really cool about paying out rewards to users who are borrowing this asset, right, is that the more velocity, right? Talking about velocity behind mine, that's like basically the reach it has and how many different things you can do with it is kind of a short explanation. But the more velocity that guard has, the higher this rate of return that folks can earn by staking the guard they borrow, right? And so what's really cool, right, is again, if we pay out 80% of the borrow fees and 100% of people stake their guard that they've borrowed, like, borrow 100 guard, 100 guard gets staked, then there's actually a loss happening there, right? You're getting charged more to borrow it than you're to stake it. But what's really unique is that the more places that people can actually go out and use their guard, that means the less guard that's being staked on the platform, right? And so again, right now our interest rate is 2%, right? So if 50% of the guard that's borrowed is being staked, then people can earn about 3.2%, right? If it's only 25, it can be actually 6.4%. So that percentage can actually keep going up. And then again, if folks say, actually, no, it costs 3% to borrow guard, then that interest rate that people might earn by staking guard can also go up. And so there's actually a really, kind of novel way here to be able to pay out rewards to people that are, better than this interest rate that they're paying to borrow it. And it's really dependent on, more velocity, more partnerships, and more liquidity in Algorand, right? One thing that's going to help boost this is, we have a partnership going live with Folks Finance this month. It's supposed to be by the end of the month. I can't promise their timeline, but it should be this month. And what's really exciting about that is that'll be another place where Guard can live, where people can borrow it. Maybe the rate will be less to borrow it on Folks Finance, maybe it'll be more to borrow it on Folks Finance, but it'll create more places for Guard to live, which means that staking rate can get higher. And in the meantime, we're using protocol funds that we've earned, not that we've earned, that we raised, right, when we were fundraising, to boost that rate of return that folks are earning. So in the meantime, there's still great advantages to be had, and again, we're paying out really great rewards to folks who are those first adopters to Guard and staking it. So again, taking care of those people who are early adopters and adding value.
That's actually really nice. You have a focus on paying back to the early investors and the community members. That's something that is very respectable for sure. So
yeah, and I was going to say, one thing I want to add to that is the model is sustainable, right? And that's the thing, is there's a lot of protocols, and going back to your question about like Terra Luna and all of this, it's like a lot of models that draw in a lot of liquidity quickly and draw in a lot of attention are unsustainable, right? And it might be for one reason, it might be for 10 reasons, right? But the whole thing about our model is that it's sustainable, right? And you can see where the interest is being earned, where new Guard's coming from, when Guard goes out of circulation, right? That happens a lot too, when Guard gets repaid. And so I think it's really important to note that our model is sustainable and it's built the right way. It's not going to make something out of nothing, because that's impossible, and it will always come crashing down at some point. Whereas our model, there's certainly been times where Guard has left the system, but it's always kept the model intact.
Absolutely, yeah. That's actually a question that when I see a protocol, I always think to myself, is this sustainable? And it's something I was going to ask, but it looks like everything was transparent there. I thought that yeah, I could see the sustainability in it. So I'm glad that you mentioned it, and I can definitely see the long-term vision in Guard protocol. So I noticed some of the partnerships listed on the website, and I think some of that may have to do with marketing plans. Can you tell us what your next plans are, your next marketing plans, and how these these partnerships kind of benefit Guard?
Yeah, I think there's different types of partnerships, right? We list like right now, I mean, again, getting into marketing, I think a big thing is building trust, right? And so our early backers are all well-known, reputable funds. Not only is our team docs, like people know who we are, but they also know who these funds are. And so I think that's one important step, right? We're not shadowy people, online that are saying to trust us, right? We're people that, we're working really hard, and we're working with really smart people to build good products. So again, I think trust is a big thing. Another big thing that's important is really just educating people, right? And I think that's definitely it's the hardest and most important thing, right? Is educating folks on, okay, we've got this platform and you can do these things on it, but here's why it's important, right? And so it's something we're still working on to this day, and we're working on improving the way that we educate folks. So it's definitely a work in progress, but I would say we're increasing our reach, we're getting more users, and again, I'm trying to be as active as possible, chatting with folks like yourself and getting the word out about Guard as best as I can, because it's I think it's really worth our time.
Awesome, yeah, I think that as well. So taking a look at the website, I see that there really isn't much left to talk about. I think that we did cover a good amount. We covered a lot about the protocol. Is there anything else that you'd like to kind of highlight or touch base on before we go ahead and wrap this up?
Yeah, I think that I just I don't know. It's a great question. I think we have covered a lot, and I think I just want to reiterate, that we've been in Algorand for a long time. our plans are to stick it out on AlgoGard and to keep adding value for the community. We really do have that ethos about us to empower our users and make them owners of the protocol. And the more value that folks add, the bigger a role they might have in the future of the protocol. And we're just going to do everything we can to make sure that we navigate any of the future obstacles, just like we've navigated previous ones, to keep the protocol going and keep growing it.
Perfect. That's yeah, that sounds great. So thank you very much for actually taking the time to speak about your project, what makes a project special, and why viewers should pay attention to it. If anyone wants to learn more about Guard protocol, make sure to check out the links in the description below. We will have their socials linked there, and you can check out their white paper as well. There is a lot of detail in there as well if there's anything that we missed out on or didn't cover. And make sure to follow their social media channels and visit their website, as they are always posting updated information. So their channels over there are the best place to find the updated information. And don't forget to kind of hit the like button and subscribe to our channel for more exciting content just like this. Would you like to say anything to our viewers before we go ahead and close this off?
No, I mean, if they made it this far, hopefully they're really knowledgeable about Guard. And if they have any more questions, we do a Twitter space every week. I'm there. One of our other founders is there. We usually have other really great folks from the AlgoGard community there. And I'm happy to answer any more questions during that time. We do it Wednesdays at 1 p.m. Eastern. And again, if you go to our Twitter, you'll be able to see the announcement for the next one that we're having, and you can come on in.
Great. Yeah, we'll have that Twitter link below as well in the description. So thank you very much, and we'll see you next time on Glitter Finance.